And I think today's a good example. A lot of bad news baked in. You have 20% price cuts, Armageddon, stocks down 2%.
A well-respected Wall Street analyst, Dan Ives, is saying that basically all the bad news is in for Tesla stock, meaning a likely bottom for Tesla stock. Dan is actually pretty good. He is one of the better analysts. He is not ranking low, and he has beat the market by 2.3%, which is very difficult to do. And when Tesla announced the price cuts, the stock did drop something like 5%, but then it recovered and ended up only less than 1% down. So let's see what Dan Ives said about Tesla stock on TV.
Fork in the road, because on one hand, you have what I view as the most transformational company potentially, in the market along with Apple. But ultimately, in terms of what we saw with Musk and the Twitter situation, that's been a huge overhang in the stock. But then you look at the opportunity. I mean, we're talking 4 or 5 trillion of potential market opportunity over the next 10, 15 years. It's still Tesla's world and everyone else paying rent in terms of EV. But competitions come from all angles. And in this risk-off market, you've seen cracks. After the Cinderella story, that's why they're cutting prices, demand's changing. And that's why for Musk, it's time to navigate the plane through the storm and not have a Ted Stryker moment.
I believe that Tesla is actually in a very good position right now. Gary here is saying that perhaps the most famous price cut was when Philip Morris cut prices by 20%. He actually had a sell rating on the company because the company was losing market share. That day, the company lost 26% of its value, pushing the entire stock market down. After the price cut, Gary went to a buy rating on the premise that the company would regain its lost share, which ended up happening. So this is when the price cut happened, 1993 April, and you can see what happened later. I agree with Gary on this one. Long term, I believe this is actually a pretty good thing for Tesla. Tesla is very well positioned to absolutely obliterate all of the competition.
And Craig, I know that you're more bearish on Tesla. What are you honing in on when you look at the outlook for Tesla?
So I've seen Tesla is egregiously overvalued over the last couple of years, valued at a multiple of the rest of the automotive sector combined. And there's nothing that they have that, names like Toyota or Daimler or others don't have themselves.
How can he say that Toyota has everything that Tesla has? Show me a Toyota that can do this. This is 3 hours and 17 minutes of Tesla full self-driving. Show me a Toyota or a Mercedes that can do this. Show me. I can't find any. I will not even go into the superchargers that Tesla has built out. And I will definitely not mention the fact that Toyota does not have a capability currently to produce about 2 million EVs, which Tesla sort of already has.
So when I look over the next couple of years, I look at a decelerating growth for Tesla. Obviously, they're looking to counteract that by cutting prices, and they'll take it on the margin, while other people are really just seeing their new products take off and supplementing the product portfolio with exciting new brands and pretty compelling products that are finding their way into consumers' hands. So, Tesla's got real competition. They deserve a lot of credit for creating the market, but on a relative valuation basis, there's much better places to put money. And, that's a difficult thing for valuation at Tesla.
Wherever you are going to put your money, do not give that money to Craig. He underperformed the market. You are better off literally putting money into S&P 500 than giving it to him. If you just put the money into S&P 500, you will make 1.7% more without doing absolutely anything. To Craig's credit, he did say buy Tesla stock a long time ago when it was almost $14. But then he said sell Tesla stock at $32, and then he didn't say buy, and Tesla stock is still well above the last time he said sell, $52. So Yeah, I would not listen to Craig, especially when it comes to Tesla stock.
Craig, I want to stay with you there and just follow up on the decelerating growth that you mentioned. Do you believe that that causes a rift within the market share that Tesla holds on to?
Well, Tesla's market share is obviously going to fall. There's no question it's going to fall. The question is how fast, how soon. It's different markets going to move at different rates, and they're fighting it. When you come out with a 20% price cut in one day on one of your mainline vehicles for North American markets, that is a big deal. That means there are big problems to solve, and Musk is looking to rectify the situation. This loss of whatever it was, $200 billion in wealth is pretty shocking. And, he's obviously looking to stabilize that. But he has, a massive boat anchor to deal with Twitter. I mean, he really probably does feel like an absolute twit, to use diction that he would know for his purchase, given that it's the distraction from Twitter that's really brought in the valuation, both, at Tesla and the confidence in Elon Musk overall.
Here's what Elon Musk has said repeatedly about pricing. He has said it is embarrassing. Elon said, we have raised our prices quite a few times. They are frankly at embarrassing levels. But we have also had a lot of supply chain and production shocks, and we have got crazy inflation. So if you were paying attention, then you, of course, expected these price cuts. And Twitter, that's just temporary noise. It is presenting us a buying opportunity. Now, if you are not accumulating, then I feel bad for you, but I am buying as much Tesla stock as I possibly can.
Dan, staying with you for a hot second, you said 70% of the sell-off is Twitter-driven. And so what percent of that would you kind of apply towards what we saw more broadly within the Fed's policy pathway? And once we have a pivot or some type of pause or at least change in tenor from the Fed and the market latches onto that, then what does that mean for Tesla shares?
Yeah, well, first of all, for risk assets, as we all know, 2022 was a horror show. Friday the 13th, just an absolute disaster because of what you saw in multiple selling off, risk assets basically heading for the elevator. Tesla, that's really poster child. If you think about it from a multiple perspective, as Craig talks about, it's the divisive. Do you treat it as an automotive company? We view it as disruptive technology. That's how we value it, but that's why it's an emotional bull bear story. I believe you start to now see risk assets, tech, Tesla, you start to ultimately see these names really rally. And I think today's a good example. A lot of bad news baked in. You have 20% price cuts, Armageddon, stocks down 2%.
That was so very well put. Armageddon everywhere. But the stock that day did not even drop 1 full percent. It dropped about 5% initially, but then it recovered. What does that mean? It's either the bottom for Tesla, or everyone was already expecting the price cuts, which I don't think people were expecting price cuts that deep. Everyone was expecting price cuts, but that high? I don't think so. So to me, it means either it is not as bad as it sounds, or we are approaching the bottom for Tesla stock. Also, check this out. This is a beautiful drawing here. Design great products, produce at scale, reduce costs, reduce price, increase total addressable market. Then we have a network effect, and then also we increase vertical integration. We create better ways to produce, such as gigacastings as an example, structural battery packs, 4680 batteries. We remove parts. I mean, Elon pushes it so far that he literally reinvented the wheel. Well, the steering wheel, that is.
It's still the best name in the space as far as market share, their pioneer status, having done all the work, all the missionary work to develop the market. So they clearly have, the most experience and the largest fleet. But others are benefiting from that, and others will have a much more cost-effective ride. And that means there's probably much better investment opportunities for the next couple of years as we see the space continue to evolve and continue to expand. And we just think that people are probably better off not buying Tesla, looking at some of these other names.
Yeah, well, I don't really know about that. Ford no longer making any profit on Mustang Mach-E. This was in June of 2022. Look at Ford Mach-E right here, long range SUV, which IRS does not call an SUV by the way, for whatever reason, I'm not really sure. The range is 310 miles, 6.1 seconds, 0 to 60 only. And you can see Tesla Model Y does that in 4.8. It has more range also. And the Ford is rear-wheel drive only and is more expensive than the Tesla. Now, it does get the tax credit, but you look at the dollar cost for the range that you are getting, and you can clearly see it's quite a bit more expensive. We are not even talking about the features and how it feels inside and the handling. I was in the Ford Mach-E, and it just didn't feel that nice as Teslas do. I mean, it's not a terrible car, it's okay, but you get in a Tesla, it's like, whoa, this is amazing. When I was in a Ford, I was like, it was a little bit of a letdown. I was expecting more. I didn't like it much. And we know Ford is losing money when they sell these. Tesla, we definitely know, is going to be making money when they sell their vehicles. So how is this competition going to compete with Tesla exactly? By trying to sell internal combustion engine vehicles is probably the answer. And these are 48 reasons why I only own Tesla stock in my stock portfolio. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.